better take a look at it.
Thanks. How's it, guys? In this video I'll be walking you through a 25 pip trade using my ICT based trading model that I took on my prop firm challenge account. At this moment you'll see me set up a sell stop order with a 13 pip stop. This sell stop order is based on an institutional order flow entry drill at the fair value gap on a 3-minute time frame highlighted on the screen. This is the moment where that sell stop order is triggered, putting me in short on the euro US dollar. You'll now see me change to the 5-minute time frame, which is the time frame that I use to gauge institutional order flow. And then I'll set up a 25 pip take profit order. And then I'll also draw out a bearish order block mean threshold at 117.61, which is essentially the halfway mark of the candlestick body of a bearish order block. And I use that to gauge the risk that I have on the trade. My thinking behind that is that I do not want the market to trade up on a 5-minute time frame and close above that 117.61 level in order for me to keep my confidence in being right in this trade idea. If the market were to close above that 117.61 that I'll delineate with the line, then I would cut my leverage in half in order for me to take a smaller hit at my full stop in the case that I'm wrong on this trade idea. If I'm right, I'm expecting the market not to trade above that line nor close above it, and to begin showing me bearish price action for the euro US dollar. This trade idea was also shared with my private trading community, who saw me outline what I was expecting coming into the trading session and got updates in real time as I entered and managed the trade position that you're now watching. I have two windows open, and to the left is the dollar index on TradingView, and to the right is the euro US dollar on MT5, which is where my prop firm challenge account is based. I am using the dollar index on the left as a barometer to gauge the price action that I'm seeing on the euro US dollar to the right because of the strong inverse correlation that these two markets have. When the US dollar index trades higher, which is what I'm expecting here, then the euro US dollar will trade lower. So essentially I'm taking my US dollar index analysis and flipping it for an opposite perspective in terms of a trade idea in the euro US dollar. That's how I trade the euro US dollar. So the framework behind the idea is that I am bullish for the session for the US dollar index, and I had observed a stop run below the Asian range low between 3 a.m. and 5 a.m. Eastern time, expecting the low of the day to form in that time window. Then I saw a 5-minute time frame change in the state of delivery, which is what I used to confirm the possibility of that low being formed. And then I enter seeking the Asian range high on the US dollar index and as much as the previous day high, and basically take that idea and bring it to the euro US dollar and seek the opposite. So that's a stop run below the Asian range low, anticipating the low of the day to form between 3 a.m. to 5 a.m. Eastern time, confirmed by a change in the state of delivery on the 5-minute time frame, followed by an entry seeking the Asian range high on the US dollar index and as much as the previous day high, then essentially taking that idea and flipping it for an opposite perspective in the euro US dollar, which is where I actually place a trade, as I do not trade the US dollar index. And once again, all of this is based off of a bullish session bias for the US dollar index. That's my trading model in a nutshell. At this moment, you'll watch me take off 80% of the position as a partial profit. And admittedly, this is way sooner than I had initially wanted to. But the reason why I did it is because the US dollar index ran in that buy side liquidity pool at about the 97.40, whilst the euro US dollar was not running its equivalent sell side liquidity pool. Therefore, I was observing more of a lag on the euro US dollar than I was comfortable with. And just to be safe, I just took the 80% off. Otherwise, I would have taken it as the euro US dollar also ran down to the 117.31s in the form of an equivalent to the buy side liquidity pool on the US dollar index. And then also lower my stop loss order to break even, technically eliminating the risk that I have on the position and giving me a free look for that take profit target at the 117.28. This is the moment where the euro US dollar eventually hits that sell side liquidity pool that I was mentioning when I took off 80% of the position off. And I take off 1 mini as it runs the sell side liquidity pool and lower my stop loss order further to secure a bit more profit. And this moment is where my take profit orders hit on the remaining position. And that's the trade. Leave a like and subscribe for more trade walkthroughs like this going through my ICT based trading model. And leave a comment in the comment section of what concepts you trade with and also what your trading model is. But with that, that's it from me and stay safe.